Morning, everybody. I'm James To. I'm the Global Business Development Director of Coinstore and Exchange. Okay, we are currently at a very violent and turbulent moments for crypto market. In fact, global. We have pandemic. We have high interest rate, inflation, property crash, and even like war. For the current situation, it's not really being helped by the recent 7 of, sorry, this one, not on. Give me a second. All right, wait for it. I think they are fixing the slides. Okay. All right. Okay, so there's a lot of people asking whether is this the, right moment to invest. If let's say they want to keep their crypto assets, where should they be keeping in? Is stablecoin the solution? A good place for you to keep your crypto assets? Okay, I would like to actually bring this topic to you guys. In order to better understand the current situation, where to keep your crypto assets, it is best to understand more regarding stablecoin, and hence I want to bring this topic to you guys. Crypto assets has been actually built to act as a medium of exchange, all right? But however, initially the first crypto assets is Bitcoin, but due to the high price volatility and also the lack of price stability, it has not really been a very good kind of crypto assets for people to really keep their funds in. Like for example, BTC actually has a very big swing in the year of 2017 when it hit 20,000 and fall to 3,500 in December 2018. Okay. In order to understand cryptocurrency better and also to use it as better as a medium of exchange, the world has come out with stablecoin. So in order to explain about stablecoin, we have to really go into the birth of the stablecoin. The first stablecoin was BitUSD, launched in 2014, and later on it was replaced by USDT in July 2014. It was launched by Big Phoenix. Okay, subsequently, cryptocurrency actually, the stablecoin actually grow. There's mass adoption, grows steadily, and in fact, in October 2020 to October 2021, it has grown exponentially to 500%. In fact, this year in February, it has hit 180 billion mark. Okay, there are many users and use case of stablecoin. Firstly, of course, is to minimize volatility. Initially, when Bitcoin was used as a medium of exchange, like for example, many industry or many companies has been using this as a way of transaction. But however, because of the volatility, company like Steam, the gaming company, has removed away, have stopped using BTC as a mode of exchange. Okay, so stablecoin actually provides a very will try to reduce the price volatility, and hence this is the use case of actually stablecoin. Of course, there's also a lot of staking functions and platform. The interest can be actually as high as 5% to 20% per year if you stake your stablecoin. And potential use for everyday currency. Actually, like for example, in 2021, Visa and MasterCard has launched payment cards that support USDT payment, and there's actually a very good channel for people to use stablecoin on a day-to-day transaction. Of course, there's more and more people using stablecoin as a form of transfer and for payment and to send to like family. I'm sure many of you here has used Western Union before. Western Union's price is about $10 per transaction. However, I mean, more commonly, Western Union is a mode of remittance for like domestic helper and also construction workers and maybe the lower income group people. And if let's say you want to make transfer to like a bigger amount, you can always use bank transfer like internet banking. But however, even for internet banking, there's a certain cap, certain limit whereby you can transfer. If let's say you exceed the amount, you will have to go to the bank branch to make transfer. Okay, but however, to all these kind of method to transfer, there is actually a limitation. Let's say, for example, during holidays or like after working hours, you may not be able to make fund transfer, and also the cost can be quite high. But however, for cryptocurrency, we don't have this problem because it's 24 hours, I mean 24/7, and usually the cost can be as low as like $1 or $2, and it's instant. Okay, and also at the same time, like for example, in other countries like Nigeria, I got a colleague that informed me that over there, cryptocurrency is very important, like stable coin, because their banking system in Nigeria can, for overseas transfer, it can take as long as like 10 days, 7 to 10 days. The fee can be as high as 10%. So that's why for a lot of other countries or other regions, stablecoin is, or rather cryptocurrency transfer is actually a matter of life and death. But of course, last but not least, there's I'm sure maybe some of you here are like businessmen that owns like business all around the world. So for cryptocurrency is a form of very convenient payment for monthly salary. Let's say, for example, if you are using the normal bank transfer method, you need to go to bank to set up a gyro or standing orders for payment on a monthly basis. The cost is quite high, and if let's say you want to track back to a previous record, banks typically will have like 5 years periods whereby they keep your records. But after 5 years, you may not be able to access to the records. But for cryptocurrency or rather stable coin payment, you can actually set in your smart contract for recurring payment on the first of every month. You can do that, and the smart contract will automatically help you to make the payment on a monthly basis, so you can scale your business globally. So this is what some businesses are doing, and a very obvious benefit and advantage of stablecoin. Okay, so let's go through maybe a few categories of stablecoin. Firstly, the most common one is the fiat collateralized stablecoin. Is usually 1:1 ratio backed by reserve currency. Currently, the most common ones are USDT and USDC, which is dominating at 2/3 of the total stablecoin market shares. Other very common ones are like PEG dollar, Gemini dollar. Both are regulated by New York State Department of Financial Services. And also you have XSGD stablecoin, which is licensed by Expo, licensed by MAS. Okay, so these are the common ones, the first type of stablecoin. The second type, which is also on the market is a commodity collateralized stablecoin. So they are actually pegged to the value of other commodities. Example like gold and silver, precious metal, oil, real estates. One of the example for the gold-pegged stablecoin is DGX, and the gold is actually stored in the vault of Singapore. The other type of like commodity, common one is SRC, which is backed by a portfolio of Swiss real estate. The third type of stablecoin is a crypto collateralized stablecoin. Typically, this type of stablecoin is pegged to cryptocurrency. Of course, not the altcoins, but rather the one that is more popular, like BTC or Ethereum. But the character of this type of stablecoin is that the price underlying as a collateral is usually more volatile. Like for example, one good example is DAI, DAI, which is a form of stablecoin. It's collateralized with Ethereum. So usually the way they over collateralize is to issue $100 worth of DAI. You need to have $200 worth of Ethereum to back it up. So this has problem as well. For example, currently when Ethereum the price drop in all cryptocurrency. Okay, the last one that is common is algorithmic stablecoin. This is quite common now. I'm sure by now a lot of people will know. Example is the Luna one. It doesn't have any collateral asset to back up. But rather they are tied to algorithms. For example, if the prices of the stablecoin increase, the smart contract will just automatically release more coins to reduce the price. So it's basically regulated by market demand and supply. There are many doubts coming from stablecoin. I'll just touch on a few. Firstly is the counterparty risk. Okay, for example, firstly is the counterparty risk. Okay, there is actually currently the USDT are the there are, like for example, many of the currency that is pegged to fiat are not fully audited. Example, USDT were actually fined. Like Big Phoenix was fined a few years ago, 41 million. They were fined because in 2016 to 2019, actually during that period, they were audited that they are not fully collateralized. Even for USDC and is also not considered fully audited. So there is always an issue of counterparty risk. Liquidity problem-wise is also pressing in terms of, especially so for commodities. Commodities, as you know, is a rare, is not like available all the time. It's rare. Like for example, gold is not is a rare item. So if let's say there's always an issue of scalability for those commodity-pegged stablecoin. Of course, another issue that is limiting the mass adoption of stablecoin is the lack of awareness and understanding of tokens, because many of them are complicated, and hence there's a lot of people still sitting on the fence and not adopting like stablecoin. And government concerns, there's a lot of people that try to push for the mass adoption of stablecoin, but however, from the local governments, they are worried that this will affect the fiat currency, the use of fiat currency, and also cause it to depreciate. So there's always this struggle between local governments and like to be very mindful about the widely use of stablecoin. And recently, China actually launched digital yuan to combat the adoption of USDT, because a lot of Chinese crypto traders, they tend to actually keep USDT and send out funds using USDT remittance. Because as you know, there's actually currency control. So China launched their first digital yuan, I think early this year, a pilot project by them. The purpose is to clamp down the use of USDT stablecoin, and there's worries that because the usage of USDT is so huge among the Chinese people, it may affect the cryptocurrency market if, let's say, there's lesser demand to USDT. Hi. Okay, but of course there's a lot of supporters for stablecoin as well. For example, one very common one where people will argue is that Coinbase is listed on New York Stock Exchange, and they listed USDC. So the claim is that if, let's say, I'm sure you know that for any stocks that is listed on the New York Stock Exchange, they have to go through very thorough due diligence and also auditing. So if, let's say, USDC is allowed to get listed on Coinbase, and hence it should be a very safe kind of stable coin. There's also a lot of mass adoption of stablecoin by financial institutions and banking companies. Like, for example, the crypto, those credit card that is allows to use USDC for settlement, like those with Visa and Mastercard. Even the federal vice chairman in a recent report in 2022 in consensus say that they should be saying yes to stablecoin, and Circle adds Signature as a banking partner. So this Circle is a issuer of stablecoin, and Signature Bank is a big US bank. So they work together to launch, to integrate the products into the bank. So in short, I would say that during this current moment, although cryptocurrency is, for the current market is very turbulent, but however, people have to move with very carefully, because there's a lot of advice on the market, but we have to be very mindful that even cryptocurrency is stated as safe. It's best to always keep it in the cold wallet, and also maybe you can withdraw it to a fiat currency when you are not using. And also, as Coinstore, we do not really invest customers or rather traders or projects money on other platform for staking or leverage. Okay, we will always keep it into a cold wallet. 99% of the funds are actually kept in a cold wallet on a daily basis, and we do not speculate the investors' money for those that actually keep in our wallet. So we are more interested in the growth of projects to grow together. So if, let's say, there's any if during this bear market or the crypto winter, we'll move together and be sustainable. So this is the introduction about Coinstore and stablecoin. We are actually at the booth inside the hall. If there's more things that we want to discuss with us, feel free to come and visit us. Thank you.